It is 9:14 a.m. Pacific Daylight Time. It is the 7th day of April 2025, and this is episode 1069 of Bitcoin, and I have re-uploaded an old episode. It was episode 329 of Bitcoin, and this thing happened in like roughly April of 2021, where I interviewed, at the time, I had just met him, and I consider him now like to be an old Bitcoin Twitter friend, you know, back when Bitcoin Twitter wasn't just totally cringe. His name is Untapped Growth, and if you are a longtime listener to the show, you've probably already heard that particular episode, but when I switched my hosting company, they were only able to get the last like 500 episodes that I did. And, you know, I'm on episode 1069, so, you know, do the math. There's a lot of episodes that did not get transferred over. Now, most of them are daily news episodes because that's what we do here at Bitcoin And, is I keep you informed on what's going on in Bitcoin. And I'll be doing so today, but I just wanted to mention that I've re-uploaded the Untapped Growth. That's his name, is my friend, Untapped Growth. And we talked about regenerative agriculture and Bitcoin and what he was doing. And yeah, I just kind of wanted to bring that back to life. So don't be fooled that I couldn't backdate it. You know, I couldn't just deliver it with the date of when it actually happened. So it's going to say, if you're not careful, it's going to sound like I recorded it, you know, recently, but that is not the case. All right. So please be aware that the interview with Untapped Growth, which should actually be dropping as I'm speaking right now, because I did it earlier this morning, it was recorded April, I want to say it was April the 1st, April Fool's Day in 2021. So if you are, if you're a soil nerd or a regen ag guy or something like that, you might want to go back and listen to that one. Like I said, it should be in your queue today. But please, please, please don't think that we recorded this recently. We did not. However, what is recent is the pop and drop of Bitcoin today, this morning, as the markets, all of them, swung wildly on, guess what? Tariff news. Yeah, it's the tariffs. It's the Trump tariffs. Christian Sandor has this one from CoinDesk. It was a wild 90 minutes in the morning markets, with the NASDAQ swinging from about a 5% loss to a 5% gain, and then returning to being flat in a very quick order on a story, which was later denied by the White House, that President Trump was indeed considering a 90-day delay in the implementation of his tariff regime for all countries except China. Quote, fake news, said White House Press Secretary Carolyn Leavitt in response to the delay rumor. The swing touched Bitcoin as well, with it rising from the $74,400 mark to above $80,000 before retreating back to $79,000, still lower by 4.3% over the past 24 hours. And Ether, well, Ether's just freaking dying. When you compare it against Bitcoin, it is a dumpster fire. Get out, get out, get out, get out. Anyway, amid the ongoing market panic, there are some green shoots, though, with European Union Commissioner Ursula von der Leyen saying that, quote, Europe is ready to negotiate with the United States, including offering 0 for 0 tariffs on industrial goods. President Trump, meanwhile, said, quote, countries from all over the world are talking to us, and claimed Japan is sending a top team to negotiate. All right, so if you saw the whole entirety of equity markets and, well, everything shit the bed over the weekend and properly freaked out, hey, this is just going to happen. And honestly, even Jim Cramer was saying yesterday that he expected a black market opening on Monday. So what's going on here? Was this a mistake in the news cycle saying that the Trump administration was considering a 90-day delay? Nobody knows. And if it did happen, you got to ask yourself the question, where did it come from? Now, did it come from a leak? Was it like, quote, leaked fake news from the Trump administration itself to sort of take the edge off of a possible Black Monday event like we saw in 1987? I don't know. Or was it somebody else outside of the Trump administration who desperately needed to somehow or another not have a 1987 style event happen and cause yet another Black Monday, especially off of the heels of what I would assume could be looked at as a Black Friday? Now, nobody knows. And that's one of the problems here, is that you've got entirety of world markets, because it's not just the United States market that's down. European markets are down. All markets all over the world are having serious freaking issues because of all this. So what does that say? Now, some of you are going to go, it's all Trump's fault. I know everybody hates Orange Man. Whatever. That's not it. When markets are so flaky that they can completely erase a year's worth of gains inside of an hour or two, because that's what happened. Within an hour or two, you saw the Dow Jones Industrial Average retrace all the way back to last year in value. I'm not all that worried. I'm just not. Markets do this shit, especially when they are as fragile as the world markets are today. And it all is boiling down to the fact that nobody knows what to do. The only safe haven that the traditional financial markets see at this point is United States dollars. And this is going to make the dollar pretty strong. And that's not going to help our import-export problems. So just be aware. Nothing is safe at this point. It doesn't mean freak out, and it doesn't mean like, I don't know, burn your, start like looting. Don't do that. Just hold on, because I get the feeling that this is, and I've said it before, I think this is just setting the stage for a massive set of negotiations. Will they work? Who knows? Some of them will. Some of them probably won't. The China deal is a big deal. But then again, I keep thinking about how much I've always been bemoaning the fact that all we're doing is buying cheap plastic Chinese shit. And I'm getting kind of tired of it. And I'll, for those of you who do not know, I'll admit this. When Obama ran for his first term, I voted for him. And it wasn't because I was a Democrat either. It was because he was the only candidate who said that he planned to get United States manufacturing back onshore. Nobody else said it. And I had promised myself I would vote for the first candidate that opened their mouth and said that they would re-onshore all of the industry and manufacturing and all the stuff that we used to do. All that went away. Starting, honestly, after 1971, it started really going away. And I was waiting for somebody to say, hey, we want it back. So I voted for Obama, and guess what? He did absolutely freaking nothing, which is kind of what I expected, but I had to vote for somebody, and now, of course, I just don't care because I'm tired of being lied to, but whatever. Just keep calm. Just because you saw, and for people that are like, hey, you're an asshole for saying this because my retirement just got clobbered. Your retirement also got clobbered during COVID. If you actually go back and look at the Dow Jones and all of the equity market charts, and you look at what happened over the weekend versus what happened during COVID, and you watch the COVID recovery and how fast that happened, unless you're planning on dying tomorrow, I think just be a little bit patient and we'll see what the hell happens, because God only knows what's going to happen next. But over in Boston at MIT, Strategy's CEO made the case for corporate Bitcoin adoption as a keynote speaker. This is out of Bitcoin Magazine, written by Nick Ward. At a recent keynote delivered at the MIT Bitcoin Expo, Phong Li, the CEO of Strategy, used to be MicroStrategy, made a bold case for Bitcoin as a core component of modern corporate treasury strategy. With over 528,000 BTC on its balance sheet, Strategy has become the most visible and arguably the most successful public company to adopt Bitcoin as a primary reserve asset. Quote, we outperformed the entire NASDAQ, the entire S&P 500, the entire Magnificent Seven, and we outperformed Bitcoin, Lee told the audience. While strategy chairman Michael Saylor laid the philosophical foundation for Bitcoin's corporate use case starting back in 2020, Lee's keynote drove home the executional and financial results. The talk, which was part challenge and part case study, urged corporate leaders to question everything from their education to their financial assumptions and to reimagine their balance sheet in a Bitcoin era. So corporations are not performing, and Bitcoin offers a way out. On day one of the MIT Bitcoin Expo, Lee opened with a breakdown of corporate America's performance problem. Of the 35 million companies in the United States, only the top tier, primarily S&P 500 firms, are meeting market expectations. The rest are stagnating. Quote, almost every other company is not performing, Lee said. He pointed the finger at entrenched financial orthodoxy. MBA programs, elite consultancies, and Wall Street firms continue to teach the same playbook. Optimize the income statement, reinvest in traditional assets, and stick to quarterly thinking. The result is systemic underperformance. Quote, all they can do is the S&P 500, Lee said, noting even private equity, venture capital, and hedge funds rarely beat that benchmark. Lee's thesis, it's not a lack of talent, it's a lack of imagination. What set strategy apart, Lee argued, was its decision to treat the balance sheet as a strategic asset rather than just a passive one. While most companies park cash in low-yield government bonds or commodities like gold, strategy chose Bitcoin. Quote, why, if you're a company, wouldn't you do the same thing? Make money off your balance sheet. Makes sense. End quote. Lee made the point that Bitcoin offers not just return potential, but structural advantages. It trades 24/7, it isn't subject to central bank policy, and it provides corporations with instant global liquidity. By contrast, traditional capital markets operate 252 days a year, 6.5 hours a day, 19% of the time. Strategy has embraced this fully, updating its Bitcoin reserves in real time. Quote, we show our results daily. In fact, we update them every 15 seconds on our website. End quote. One of the biggest challenges for corporations adopting Bitcoin is the mismatch between traditional accounting rules and a 24/7 asset. Current standards were built for quarterly earnings and slow-moving financial instruments, not real-time globally traded digital assets. As Fong Lee put it, quote, accounting policies update every 5 years. Accounting policies don't work for Bitcoin. Under GAAP, Bitcoin is treated as an intangible asset, marked down when prices fall, but not adjusted upward when they rise, creating a distorted view of financial health. To close that gap, strategy has adopted a more transparent approach. Quote, we show our results daily. In fact, we update them every 15 seconds on our website. This real-time reporting reflects the always-on nature of Bitcoin and signals to the market that strategy is playing by a different but faster set of rules. Rather than wait for instructions to catch up, strategy is setting the standard for how the performance of Bitcoin treasury companies should be measured. Since adopting its Bitcoin treasury strategy, MSTR stock has become, quote, the most performant, the most volatile, the highest volume, and most interesting stock in the United States, according to Lee. Its performance has consistently outpaced traditional benchmarks, not just because Bitcoin appreciated, but because strategy leaned into its identity as a Bitcoin native public company. And it's not alone. Lee highlighted the growing list of companies replicating the model: Metaplanet, Similar Scientific, and KULR Technology Group, all of which outperformed the S&P 500 and Bitcoin after adopting similar treasury strategies. Quote, this is a replicable strategy. Everyone else should be doing this. Lee closed the talk by challenging executives and investors to question conventional wisdom. Strategy success did not come from following the crowd. It came from rejecting it. Quote, it takes courage. It takes original thinking. It takes independent thinking. It takes bravery, and it takes Bitcoin, end quote. As the first public company to turn Bitcoin into a cornerstone of its balance sheet, strategy under Michael Saylor's vision and Phong Le's leadership has redefined what's possible in corporate finance. Or, as Lee put it, quote, Bitcoin allows corporations to find freedom from the average, end quote. We don't ever really hear a whole lot from Phong Le, the actual CEO of MicroStrategy. Michael Saylor is generally pretty much the bombastic guy, and everybody wants to talk to him. Everybody wants to interview him, and I get it. I mean, he's a fun guy, but holy shit. You know, it's not like we shouldn't be trying to figure out what Phong Le is thinking. So I'm glad that that he was giving this keynote at MIT so we could get a little bit more in depth into what the CEO of strategy is actually thinking. But remember on Friday when China, it was either Thursday or Friday, I can't remember. I really can't remember. But when China said they were going to do retaliatory tariffs, and that tore up the market, that's what crashed everything at the end of last week. All right, but Bitcoin was in the green. GameStop was in the green, although I have yet to see them actually purchase Bitcoin. But there's enough rumor action and from their statements that they are going to buy Bitcoin that they're sort of Bitcoin adjacent. So they were in the green, and strategy was in the green. And IBIT was in the green, and everything else was dying. Gold was having problems, so Peter Schiff wasn't happy. It took all the way until yesterday that Bitcoin cut loose from its $84,000 peg and dropped down to 74,000. It took like 72 hours almost for that shit to occur. Well, 48 hours for that shit to occur. And even though, and I was like looking at today, even though we had that fall off the cliff for the price of Bitcoin, it still is not anywhere close to as bad as the traditional equity markets. So even then, even with going all the way down to 74 or whatever, 74,400, it still was more resilient than equity markets. But I want to close this just by saying, hey, just because MicroStrategy is finding favor in the fact that they clearly have made a bold choice to put that much Bitcoin on their balance sheet, their exposure, the sheer amount of exposure to the Bitcoin markets that they have almost ties them completely and from now until the end of that company's life, whenever the hell that happens, it's inextricably linked to Bitcoin. So whatever Bitcoin does, MicroStrategy is going to do, and it's not the other way around. Whatever MicroStrategy does is going to be like a gnat on like Bitcoin's ass. So I don't see it as a two-way street. But even then, shit, I mean, as much as I love Bitcoin, that would make me nervous. Although I still think that they've done the right thing, only if you're thinking about very long-term plays, though. And I think that that's really where this strategy is going to work for them in the short term, and even the mid to medium term. I think there's going to be so much volatility, it's going to make shareholders of strategy kind of seasick. But in the long term, I think it's going to be the best play. And speaking of, it's about time that Michael Saylor did not buy Bitcoin. I mean, there are days when strategy needs to buy Bitcoin, and then there are days and weeks when they don't need to be doing that shit. And it looks like Saylor came to his senses after seeing all this tariff talk and said, you know what? Let's not buy Bitcoin. And that's exactly what happened. Michael Saylor's strategy did not buy, despite a dip below $87,000. Helen Parks is going to tell us a little bit more. Maybe we'll get some ideology or idea as to what's going on in Michael Saylor's brain, and I hope it's what I'm thinking. But Michael Saylor's firm Strategy, the world's largest publicly listed corporate holder of Bitcoin, did not buy more Bitcoin. In a filing with the U.S. Securities and Exchange Commission on April the 7th, Strategy announced it made no Bitcoin purchases during the week. of March 31st to April the 6th. The decision followed a heightened market volatility during the week, with Bitcoin surging to as high as $87,000 on April the 2nd, after starting the week at around $82,000, according to CoinGecko. In the period from March 31st to April the 6th, Strategy also did not sell any shares of Class A common stock, which it tends to use for financing its Bitcoin buys, according to the filing. As of April the 7th, Strategy held an aggregate amount of 528,185 Bitcoin, bought at $35.6 billion, or an average price of $67,458 per BTC. Quote, our unrealized loss on digital assets for the quarter ending March 31st, 2025 was $5.9 billion, which we expect will result in a net loss for the quarter ending March 31st, 2025, partially offset by a related income tax benefit of $1.69 billion, according to the filing. While Strategy avoided buying Bitcoin last week, its co-founder and former CEO Saylor continued posting about the crypto asset's superiority on social media. Quote, Bitcoin is the most volatile because it's the most useful, Saylor wrote on Twitter on April the 3rd. And then what else have we got? Anything? Let's see. Today's market reaction to tariffs is a reminder. Inflation is just the tip of the iceberg, Saylor wrote in yet another Twitter post. And capital faces dilution from taxes, regulation, competition, obsolescence, and unforeseen events. Bitcoin offers resilience in a world full of hidden risks, he added on that tweet. So there you go. But here's what I'm not seeing. I don't need it to happen, but it would be nice if Michael Saylor would say, hey, look, there are times when you buy Bitcoin, there are times that you do not buy Bitcoin, and this was not the time to buy Bitcoin. Unless you're pleb, retail level, $25 a week, maybe $50 a week on, daily cost averaging or whatever. Sure. Okay. At that point, it doesn't matter. But when you're making massive purchases and the market is freaking out because nobody knows what to do, that's probably not the best time in the world to actually buy Bitcoin, because you need to let the suckers wash out first. And then you go back in, and when the smoke clears and the fog kind of clears a little bit, that's when you start pulling triggers. And speaking of pulling triggers, I got Maple Trade with his maple syrup and his sister Sarah's soaps. It's Maple Trade in the Bitcoin and. The Bitcoin and is where I bring plebs like you with goods and services to plebs just like you that maybe want to buy those goods and services. And this maple syrup is handmade. He's not reselling it. He's not drop shipping it from some maple syrup manufacturer from freaking Canada. No. This dude taps his own maple trees. He gets the sap. He boils it down. He puts it into bottles and he sells it for Bitcoin to people just like you. It's delicious. I've tried it. And the fact that it's handmade makes it taste even better. You can get a quart for $27. You can get a half gallon for $45. You can get 6 pints for $75. And it's made by your friend Maple Trade. He's on Nostr. And because he takes Bitcoin for his goods, and also don't forget to ask him about Sister Sarah's soaps. They're really good too. I've tried them as well, and they're fabulous. But make sure that when you go, and you go to he doesn't, as far as I know, he doesn't have a storefront yet. I kind of want to change that. I've got a new website. Maybe I can set up a situation where I am able to showcase the different vendors in the Circle P. But right now, you actually have to DM him or tag him on Twitter at Beisnerds, Beisnerds. You can also find him on Nostr, also at Beisnerds, Beisnerds. If you have problems getting a hold of him on Nostr, just go down to the show notes. I've got his npub directly in the show notes. Just click the URL and you'll get right to him. I've also got his Twitter account or profile right as a URL right in the show notes, so you can just click it and go right there. Make sure you tell him you heard it in the Circle P on the Bitcoin and podcast, because that way he knows that I was able to make a sale for him. So he is going to run out of his maple syrup fast. you want to try his maple syrup. Not only because it's delicious, but because you will help me, you will help Maple Trade, and you will help all the plebs that have goods and services for sale, because that's what we do here. We try to help each other do the things that we really love to do so that we don't have to do any of the crap that we don't want to do. Like this idiot, Conor McGregor. Oh my God. It just, I mean, as if anybody was going to actually think meme coins were going to do anything in this market environment. No. Conor McGregor just doesn't seem to, I don't know, read news or whatever. From decrypt.co, I got Vince D'Aquino writing this one. Conor McGregor team has refunded the failed meme coin auction, but they're going to relaunch it. Yeah, they're going to relaunch it because they just can't get enough of stupid. If stupid was on the menu, the restaurant would probably be out of it by now. UFC champion and celebrity Conor McGregor's crypto token failed to launch after raising only 39% of its minimum fundraising target during its 28-hour pre-sale period that ended on Sunday. The token, developed by Real World Gaming DAO, secured just $392,000 in USDC from 668 bidders, falling far short of the $1,008,000 minimum requirement to proceed with the launch. Following the auction's close, they stated on X that it didn't hit its minimum raise, adding that all the bids would be refunded in full. McGregor shared the announcement saying, quote, "Ladies and gentlemen, this is real." Whatever the hell that's supposed to mean. On-chain data shows that all refunds were processed and a settle batch transaction was deployed to the rwg.eth address at block. And then they give the block and the time. Who cares? It's all bullshit. Because this is what I'm getting at here is that you've even got Conor McGregor, who still thinks that meme coins are going to, I don't know, make him even more rich than he already is. I mean, I assume he's got sitting on at least a little pile of money there, man. I mean, he's won a lot of fights, and UFC isn't exactly cheap with their payouts. But it just goes to show, if you're not watching what's going on in the wider world, you're going to end up thinking that either A, you're going to get rich off of selling a bullshit meme coin, which you shouldn't do in the first place, or B, that you're going to get rich by buying a meme coin. Have you not looked at the fact that nobody in the world, even like the people that are financial experts and have been so for 40 years, that will never even think about Bitcoin, much less meme coins, even these guys don't know what the hell to do with their money, and you think this is the proper time to launch this crap? You're either stupid, or I've got bridges all over Arizona that I'd like to sell you. Now on to Bitwise debuts option income ETFs on Bitcoin treasury stocks MSTR, MARA, and Coin. Derivatives, man. Stay away from these. I'm giving you this news so that you know what the hell the direction of this wild ass market is going. Bitwise has introduced 3 new ETFs that provide yield-seeking investors with exposure to leading Bitcoin treasury companies using a covered call strategy designed to capitalize on equity volatility while preserving Bitcoin-linked upside. See, it's a win-win-win, people, and when you see that shit in the markets, you should probably run away. But the funds include something called IMST, which tracks strategy. There's IMRA, which focuses on Mara Holdings, a top Bitcoin miner. And there's ICOI, offering exposure to Coinbase. Each ETF employs an actively managed options overlay, writing out of the money calls on the underlying equity while maintaining a long position. This approach is designed to deliver monthly income distributions, particularly attractive in today's highly volatile environment, while retaining meaningful upside exposure to Bitcoin-linked companies. See, the way that this shit's written is like there's no downside. I highly recommend that you guys be very careful when you see language written this way. oh, you're going to get exposure to the upside. You're going to get a monthly income distribution. You've got yield. It can't go wrong. Oh, yes, it can. These are derivative products, right? You're holding a derivative of a derivative. It's a second order derivative. You don't want to have you don't want to push yourself this far out into the curve that is legacy financial markets. Just please stay away and we'll run the numbers. Futures and commodities and everything is bleeding, as you might imagine, except for silver, amazingly enough. But oil, West Texas Intermediate, is down 1.5%, all the way down to $61 a barrel. Friday, it was 67 or 68, right? It was like, actually, I think it even peaked out at around 69. Yeah, it's all gone, bitches. Brent North Sea, likewise, down exactly the same, 1.5 to $64.57. Natural gas is down 1.5 to $3.77 per thousand cubic feet, and gasoline tumbling almost a full point, back down to $2.03 per gallon. Gold is below its $3,000 mark. 1.19% to the downside brings it to exactly $2,999.30. Silver, however, as I said, up 2 1/3, back up to $29.92 per ounce. Platinum is down 0.8%, copper tumbling 3.7%, and palladium is down 1.6%. Ag, please save us. Not much saving here, guys. Biggest winner, however, is cotton, 2.75% to the upside. Biggest loser is coffee, 6% to the downside. And live cattle is down well over a full point. Lean hogs are down 1.25%, and feeder cattle are down 0.88%. Now, here comes the equities. The Dow is down 1.77% after its serial tumbling over the weekend. It now stands at 37,854 on the index. The S&P is down 1.25%. NASDAQ is down 0.78%, and the S&P Mini getting hammered as well, 1.77% to the downside. Oh, and by the way, the 10-year Treasury bond yield, the 10-year yield is now back up above 4%. It was down to something like 3.8% yield, I believe. And that's what we were thinking that Trump was trying to do with all of this insanity that's going on, is to try to force Jerome Powell's hand in lowering the Fed interest rates, because they cannot keep the 10-year above the 4% threshold. But that changed this morning when we had these wild fluctuations in the market. We're apparently up over 4% still. So just be aware. $77,660 for one Bitcoin is going to get you a $1.5 trillion market cap, and we can only get 26 ounces of shiny metal rocks with our one Bitcoin, of which there are 19,847,804.03 of. And average fees per block are pretty damn low. We've got, I don't know, it looks like 5 blocks carrying a measly 7,000 unconfirmed transactions, waiting to clear at high priority rates of 5 Satoshis per VByte. Low priority is going to get you in at 3, but mining soared yesterday. Wow. Hash rate right now stands at 906.9 exahashes per second. That's pretty high, but it's not as high as it got, and I'll tell you a little bit more about that later. From Brewing Biology, which was Thursday's episode of Bitcoin. And I got a lot of feedback on this one. A lot of people really like this. I got a lot of activity going on. So I'm going to try, I keep trying to think about different ways to approach the subject of soil, but I don't want it to get to where it's just nothing but a soil podcast, because this is supposed to be different things. But you guys really enjoyed this one, and I would read you all the boostograms that I've got. However, Fountain.fm is sitting here continuously spinning its wheels and not letting me see any of the boost that I was able to see, I don't know, about 30 minutes ago when I started the podcast and I was setting up the show. So we'll come back to that. Well, I'll let that one spin and put it at the end here. Okay, let's see. Yep, that's it for the weather report so far. Welcome to part 2 of the news you can use. This one I was going to do for the Friday show, but as you might know, there was no Friday show. It just happened that I wasn't able to cut one for you guys, and my apologies for that. But I think this is important enough to carry forward for today. Callan Quinn, writing for Decrypt, United States House Committee votes to move forward on an anti-CBDC bill. I take this as good news. A Republican-led effort to prevent the creation of a United States central bank digital currency moved forward on Wednesday as the CBDC Anti-Surveillance State Act passed out of the United States House Financial Services Committee with a 27-22 vote. Sponsored by Representative Tom Emmer from Minnesota, the bill seeks to prevent the Federal Reserve from issuing a digital dollar, citing concerns over financial surveillance and the transformation of the central bank into a retail banking entity. The bill also bars the Fed from indirectly deploying a CBDC through intermediaries and explicitly blocks it from using digital currency as a tool for monetary policy. Emmer spoke in support of the bill during the markup session, telling the chairman that the government should never be involved in the business of creating tools for financial surveillance. Quote, unlike decentralized cryptocurrencies such as Bitcoin, a CBDC is a digital form of sovereign currency that is issued, monitored, and managed by a central bank. In short, a CBDC is a government-controlled programmable money that, if designed without privacy protections of cash, could give the federal government unilateral authority to surveil Americans' transactions and restrict politically unpopular activity, end quote. Unlike decentralized cryptos like Bitcoin, a CBDC is, in fact, a government-issued digital currency running on a state-controlled ledger. Critics, and Emmer is chief among them, warned that it could open the door to surveillance of how citizens spend their money and programmable features that could prevent individuals from spending their money however it is they wish. Fierce opposition to a potential CBDC in the United States signals growing momentum among privacy hawks and crypto-friendly lawmakers who view a digital dollar as a Trojan horse for financial control. Quote, power-hungry bureaucrats will stop at nothing in their quest to gain control over the very people they're supposed to be working for, Emmer said, pointing to concerns China will use its digital yuan to track citizen spending and Canada's 2022 freezing of protester bank accounts. Emerson first introduced the leading Republican bill to ban CBDCs in January of 2022. The legislation passed the United States House of Representatives in the 118th Congress. Let's just go ahead and move on, shall we, to Savannah Fortis, writing out of Cointelegraph. American Bitcoin's ambition is to dominate mining, according to the Hut 8 CEO. Remember last week when I was telling you about American Bitcoin, the company that is apparently Eric Trump and Donald Trump or Donald Trump Jr.? Yeah, well, let's see if we can pull out a little bit more about what they're thinking here. I'm not exactly sure myself, but hey, maybe Savannah has something to say about it. Earlier this week, Bitcoin mining giant Hut 8 revealed a partnership that includes two, not one, but frickin' two members of the Trump family, Donald Jr. and Eric. And it plans to launch a new mining venture called American Bitcoin. In an exclusive interview on Decentralized with Cointelegraph's bite-sized insight series, Hut 8 CEO Asher Ganoot shared new details about the venture's vision, why the timing was right, and how the company plans to scale. Quote, "We've thought about splitting out our Bitcoin mining and energy infrastructure business for some time," Ganoot said. Meeting Eric and Don Jr. and seeing their deep passion for Bitcoin and infrastructure was the perfect catalyst. According to Ganut, the goal is clear: to build one of the world's largest and most efficient Bitcoin mining platforms rooted in American soil and aligned with pro-Bitcoin sentiment growing under President Donald Trump's administration. Quote, Eric told me, I don't want to get involved in anything that isn't the biggest and the best, he said. The move comes at a pivotal moment for U.S.-based mining, with China out of the picture post-2021 crackdown and Washington now openly exploring the idea of a strategic Bitcoin reserve. America's place in the global mining ecosystem is under transformation. Still, sizes and everything, Ganut emphasized that efficiency and cost-effectiveness are core to the strategy. Quote, we don't want to just be the biggest, we want to be the most efficient and cost-effective miner. If our cost basis isn't low, we might as well just buy Bitcoin, end quote. Well, it's good advice. American mining or American Bitcoin structure allows it to mine BTC at low cost, accumulate more when the market allows, and potentially expand into other Bitcoin ecosystem services. Hut 8 currently holds over 10,000 Bitcoin on its balance sheet, worth up to $1 billion depending on the market conditions. American Bitcoin aims to add more. And the company isn't just bullish on Bitcoin, it's bullish on power consumption. Ganut pushed back on criticism that mining wastes energy. Quote, power consumption has only increased with every tech revolution. Cheap, excess energy is what drives Bitcoin mining, and a lot of that energy is renewable, end quote. Looking ahead, Hut 8's mining spinoff has bigger ambitions. Quote, our focus is scaling. Our focus is taking this company public on a United States exchange. You'll hear more from us soon. Okay, so not a whole lot there other than the fact that they are really concerned with getting their power cost basis down to where it's easier to mine the Bitcoin, or rather cheaper to mine the Bitcoin than to buy it. And honestly, at least they're going in the right direction. However, I'm not sure about Eric and Donald Trump or Donald Trump Jr. rather. I'm still not sure about either one of those guys' absolute obsession over Bitcoin. I smell shitcoinery just around the corner. I absolutely do. I just keep thinking about it. I'm like, they're shitcoiners, man. They're not actual Bitcoiners. There's something about them that just makes me go, shitcoining. And of course, if it wasn't for the Trump and Melania coin, I would still be thinking that way. Because everybody falls into that trap. Just think of the guys who've been holding onto their ETH, and then go look at the ETH, over BTC chart, and you can shed tears for them if you are empathetic enough. But we've got other fish to fry, because as I alluded to earlier when we were doing the weather report, Bitcoin hash rate reached 1 Zetahash or Zetahash. Yes, 1 Zetahash. It actually went well above the 1,000 exahash limit, which puts you firmly into the Zetahash region. Of course, then again, as you know, it fell down back below that, but still, dude, we hit a Zetahash for the first time. This is out of Atlas 21. The Bitcoin network has just reached a historic milestone in its 16-year existence. Its hash rate surpassed 1 Zetahash per second. According to several trackers, not just one, but several trackers monitoring the network's compute power, this result was recorded between April 4th and April 5th. Data from mempool.space shows a peak hash rate of 1.025 Zetahash on April the 5th, while BTC Frame reported the 1.02 Zetahash threshold was already reached on the previous day. Coinsware data showed a peak of 1.1 Zetahash on April the 4th at block 890,915. The discrepancies between different trackers are due to various methodologies used to calculate the network's hash rate. CASA's CSO, Jameson Lopp, previously noted that estimating hash rate using only one trailing block instead of 5 can result in a difference of over 0.04 zetahashes per second. Despite the data differences, Bitcoin's climb to 1 zetahash equal to 1,000 exahash per second marks a 1,000 times increase, or 1,000x increase, since late January of 2016 when the network first hit 1 exahash. To put things in perspective, Litecoin, the second largest proof-of-work network, currently has a hash rate of 2.49 petahashes per second, according to CoinWares, making it roughly 40,000 times less powerful than Bitcoin in terms of its computational strength. Mara Holdings is currently the largest Bitcoin miner with over 50 exahashes per second of compute power, while the majority of the total hash rate is channeled through Foundry USA and Antpool, according to the hash rate index. At least 24 publicly listed companies are involved in the mining industry for Bitcoin, according to companiesmarketcap.com. Other major contributors to the hash rate include Riot Platforms, Core Scientific, CleanSpark, Hut 8 Mining, and TeraWolf. So shout out us for, 1 zetahash per second of compute power. On to other things, but also from Atlas 21, address poisoning. Well, the attacks are on the rise, according to Jameson Lopp, who we earlier heard from in the previous story. Address poisoning attacks on Bitcoin are increasing. That's according to Jameson Lopp, co-founder and chief security officer of Casa, a company specializing in Bitcoin custody solutions. This type of fraud, which tricks users by exploiting similarities between wallet addresses, is becoming more widespread thanks to low transaction fees, allowing attackers to target many addresses with minimal investment. Here's how it works. In an address poisoning attack, the scammer sends a small transaction, usually less than $1, to the victim using a custom-made address controlled by the attacker, and that has the same first and last characters as a recently used address by the victim. When the victim later wants to send funds to the legitimate address, they might mistakenly copy the fake one from their transaction history, unknowingly sending Bitcoin directly to the scammer. But how is it possible to create such a similar address? Through brute force, where you're generating millions of random addresses and discarding the ones that don't resemble the target. There are many free tools online known as vanity address generators designed to create customized or lookalike addresses. Lopp conducted an in-depth analysis of the entire Bitcoin blockchain, identifying around 48,000 suspicious attacks since 2023. His methodology looked for transactions transactions with one input and one output involving two different addresses that had the same first 4 and last 4 characters. Although most of these attempts were unsuccessful, Lopp documented at least one confirmed fraud in which a victim sent 0.1 BTC to a malicious address and then 12 hours later sent the same amount to what was likely the intended recipient. Quote, that single successful trick could have easily yielded a much higher return on investment, as the address from which the funds were spent held nearly 8 Bitcoin, Lopp noted in his analysis. During his talk at the MIT Bitcoin Expo, Lopp attributed the rise in these attacks to the current environment of low transaction fees. He said, quote, these attacks are a result of us being in a very low fee environment. If we had higher fees, I think it would greatly discourage people from performing many of these dusting attacks unless they found other ways to improve their success rates, end quote. So how to protect yourself? This kind of attack is not unique to Bitcoin. Other blockchains have also been affected. In May of 2024, an Ethereum user lost $71 million in a similar attack, although the funds were later recovered after negotiations. Lopp believes software wallet developers could implement user alerts to mitigate the risks of these scams. Quote, I think it would be easy for wallets to say, oh, this transaction came from a lookalike address and flash a big red warning. Do not engage, said Lopp. The growing prevalence of these attacks highlights the importance of carefully verifying wallet addresses before sending in any transaction, double-checking every single character. Yeah, that's really the way that you do this. So if for whatever reason, and honestly, you don't even have to think about the fact that these phishing attacks or these address poisoning attacks are going on. We should be doing this anyway. I do. I check. I do check the first characters, and I do check the last characters, but I also pick a couple of spaces, like places in between in the address, where it would be highly unlikely that they'd be able to like figure out, because the way it works is that most people are going to look at the very first of a sentence or a string of characters and the very last, because it's easier for your brain to interpret where you're looking. And that's just psychology. If you're looking in the middle of, especially Bitcoin addresses, which are like, uppercase and lowercase numbers and characters and all, it becomes like just, it hurts your head, right? But you really got to focus in there into the center, and then to the right of center, and then to the left of center, and then the first, and then the end. You look at like 4 or 5 different places, and you confirm at least, this guy's saying every single character. And you could do that simply by, if you wanted to, you could paste the address of where you think it's got to go. And then you copy and paste the address of what you've got set sitting in your wallet, and you post both of those into like a Word document. And then you check both of them with both those addresses with find. If one of them, if you put one of the addresses in there and only one shows up, instead of having like the find feature in like Microsoft Word or something like that, instead of showing 2, like the address that you intend to send this to, like the address that you're really want, like the address that was given to you by the guy that you were talking to on the phone, and he texted you the address or something like that. And you post that in like that, and like any other instances of the address that you're going to send to. And if you put the address that you're going to send to into the find function, and you've got 2 addresses in the document, but only one shows up, it's different without having to look at it, because the computer basically essentially said, no, that's an I, not an L, right? And that's another issue here, is that I's and L's look suspiciously alike, and some people can spoof for the number 1 depending on the font. Just be careful. All right, be careful and take care of your how you look at your addresses. All right, so former Binance CEO Changpeng Zhao has joined the Pakistan Crypto Council as an advisor. Why? I mean, of all places, Pakistan seems very odd, but the block.co has this one. Who's it written by, though? Oh, MK Manalyov, I think is how you pronounce it. Anyway, CZ, the former CEO of the crypto exchange giant Binance, has joined the Pakistan Crypto Council as a strategic advisor to help guide efforts on crypto infrastructure, education, adoption, and other pursuits, according to local media. His appointment to the Pakistan Crypto Council, a regulatory body within the Pakistani government that oversees blockchain and crypto-powered initiatives, comes amid the country's larger effort to embrace cryptocurrency. Good luck with that. The Pakistani government formed the Pakistan Crypto Council in mid-March of this year, according to additional local media reports. Though he did not address working with Pakistan's government specifically, CZ wrote on the social media platform Twitter on April the 3rd that he, quote, officially and unofficially advises a few governments on the crypto regulatory frameworks and blockchain solutions for government efficiency, expanding blockchain to more than just trading, end quote. Further quote, I don't get involved in politics or anything else, just crypto, he added. As Pakistan Crypto Council CEO Bilal bin Saqib told Bloomberg TV on March the 20th, Pakistan's broader push into digital assets comes after the election of United States President Donald Trump. The Trump administration has promised to make America the leader of digital assets, complete with efforts to create a crypto reserve, including Bitcoin. Quote, Trump is making crypto a national priority, and every country, including Pakistan, will have to follow suit, or it will be at risk of getting left behind. Our plan, as the Pakistan Crypto Council is very clear on, Pakistan is done sitting on the sidelines. We want to have regulatory clarity. We need to have legal framework that is pro-business. We need institutional adoption. We want Pakistan as the leader of blockchain-powered finance, and we want to attract international investment, Saqib said. Though CZ previously served as CEO of Binance, he left the firm in accordance with the United States Department of Justice after pleading guilty to violating the Bank Secrecy Act in November of 2023. Binance and CZ have been increasing their presence in South Asia and the greater Middle East, and on March the 12th, Binance received $2 billion from MGX, an Abu Dhabi-based technology investment firm, in one of the largest financing deals that Binance has ever received, with MGX taking a minority, not a majority, but still, even after all that money, they've only taken a minority stake in Binance. Binance led the cryptocurrency spot market in February, handling nearly $651 billion in trades, 36.8% of the $1.77 trillion total, according to Block's data dashboard. Wow. So CZ rolling on in Pakistan. Who knows if Pakistan ends up being some kind of world leader. I honestly doubt it. I honestly do, but we'll have to wait and see. And that was it. I'm still here looking at my at Brewing Biology, the last Thursday's episode of Bitcoin and I just don't have any boostograms. They're just not showing up. So there's something going on over there at Fountain, and that's okay. I mean, I will try to include the higher ones in tomorrow's show, but we are finished here today. Episode 1069 is in the bag, and I will see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.